And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you from Westlake Village, California, and we're getting a splash of sunshine today. Thank God, and hope you're having a blessed and highly favored day. I am bringing so much good information for you guys, so smash that like button, share it with a friend, and let's get right into it. Starting off, I guess, with Ethereum, which has been leading the market here compared to Bitcoin, and we're at the top side of the channel here, or the top side of this ascending triangle, which I'm going to try and draw it out for you guys so you have a little better idea. And these have a 75% chance of breaking out to the upside. And that would be with, some would already say it's already broken out, right? It's the second time. So you could use the wicks. More conservative investors use the wicks, and more aggressive, in my opinion, use the bodies, right? See, as you can see, the bodies, right? We never took out this wick. So this is going to be the line in the sand. We rejected here, rejected there, and I don't know if I'd call that a rejection yet. So right here, any kind of a 4-hour closure, even above here, and I am looking still more likely than not that Ethereum does take a run up to the top side of this trend line here, which is probably going to correlate with that purple 200, right? So, we want to see this break first, and we are getting the silver cross here. Typically, this is a good buy signal, as well as daily soaks are, they're getting deep up in the, deep up into the critical zone here. And, at some point that thing's going to cross down. Today, we're going to cross down below 1327. And, as I said yesterday, on Bitcoin, if we do see that happen, any kind of a tick below 1316, and this thing will come down to, $1,300 again, which is completely fine. As long as we continue to hold this trend line, I do expect, slowly but surely, and these things take time, as Bitcoin rises, Ethereum follows with more gains typically. And, same thing there. So my point in saying, let's take a look at the measured move on Ethereum with any kind of a closure above there, right? So we measure from the 50% mark. So call it right here. Close enough is close enough. And, that gives us a target back up at 1550. And I think that is pretty conservative, given that Ethereum could move a lot more based off of what Bitcoin could potentially do here. And yeah, it's, it all has to do with Bitcoin and the dollar, right? So whatever the dollar does, the risk assets are going to do pretty much the opposite. And I'm going to pull this up here. The US dollar, so what do we have here? Stokes are crossing down, volatility is increasing, and we just broke the range to the downside. So I would suspect some more downside displeasures. More downside displeasure for the dollar and upside pleasures for you long bulls out there. I still get this question a lot. What is a bull market? What is a bear market? I know it sounds silly. And why do they call it that? Why is it, and here's why. In a bull market, well, here's bulls buck up and the bears claw down. So bear market goes down, bull market goes up, right? And we are in a bear market on the higher term time frames still, all the way up to, a daily or down to a daily. And that's that. So does the dollar provide a little relief rally? I do think that's more likely than not. As I've been saying over the past couple of weeks, I think Bitcoin, likely takes a stab up before it makes new lows. Doesn't mean we can't revisit the lows, but what it does mean is that, it's just statistics and probability. That's what technical analysis is. It's statistics and probabilities, not guarantees. TA is not a, gotta get rid of that call. T is not an exact science. It's more of an art, right? And it's all about statistics and probabilities. And thank God for TA. Who's gay for TA? Smash the like button. Just kidding. All right. So next stop up here. We talked about the dollar and, where's the measure move on the dollar? It's really easy to do a little consolidation here, and it does tell me we're going to get a little bit further down here. And here's something I pointed out yesterday, and this is why risk assets and why I think gold is going to perform extremely well over the next, 2 quarters. I'm going to get rid of some of my squiggly lines here. I'm going to get rid of all this so you can see it a little better. Bear with me just a second. This is a 6-month time frame, a very powerful time frame on the US dollar. And this is a shooting star candle. Implies continuation to the downside. And by ticking below here, that gives us the bias that the dollar is going to come down over the next 6 months. Could be over the next year. Hopefully it's over the next month or two. Hopefully it's quick and fast to the downside, because then risk assets really fly to the moon here. But this is the bias buster. This is the dollar, king dollar, right? And just because the dollar comes down to 99 or even 95, right, we're still in a macro uptrend, long-term target over the next year to 2 years. I think the dollar probably flies up to about 150. I could be wrong. Totally could be wrong. But I'm going to stick with my guns here on this one and say short-term dollar down, risk assets up. And provided that we don't have any black swan events, Bitcoin, it's going to take some time. And here's what I want to bring up. And this is, some of the statistics and probabilities I want to talk about. And we've been following up on this 2-day time frame, the 2-day time frame for Bitcoin. The 2-day, here we go. So what do I want to bring up here? The 2-day time frame is that when we get extreme lows, and what I define as extreme lows is below the 5 percentile. And when we get extreme lows and then we get expansion off the lows. So how does volatility work in Bitcoin land? Let me explain something to you. This is the BBWP. It measures the volatility or the width of the Bollinger Bands. And one thing to note in Bitcoin land is when you get in a period of extreme low volatility, there's one thing you can expect for sure, and that's volatility. It's coming. A big, massive move in Bitcoin has been baking for months. And how do we define expansion? So when volatility expands, you're going to expect the price to go in the direction of the trend typically. However, and what do I define as expansion is above 20 percentile for me. Once we get above 20 percentile, you are going to see the result of this move. Now, once volatility expands, the average move on the 2-day time frame is 34%. Okay. Now that can deviate, and there's going to be some different, measurements over time. It's not guaranteed. 34%, but expansion off the lows from this point right here, from where the Stokes crossed up. So we got the cross up right here. So I define this as the low that it would be coming off of. And where would 30% get us from this level? Here's 20%. I think this is more realistic target. About 19.9. Really, this is more realistic given the economic environment. 10%. But again, here's what's unique, right? So we just said, typically when expansion happens, the price will go in the direction of the trend. And provided that the dollar continues to go down, I would expect this to run a bit. And we could get that 20 to 30% move, especially if the dollar does head down to 99. I mean, if we start breaking down below 100, I would suspect, yes, Bitcoin and Ethereum do hit those, the full measure move off of this. And by the way, Bitcoin does 34%. You could expect Ethereum to do, 40 or 50%. Just from what I've seen, again, not financial advice. I'm not a financial advisor. I'm just telling you what I've seen over the years in trading lots of crypto since 2017. And what do I think is, okay, so we got the Stokes. That's the point. So this is a volatility momentum play, right? And so what happens is this is our momentum indicator. So we'd expect the price to go in the direction of the momentum, and The average move is the stochastics have been right in calling the direction of the move 84% of the time. Thanks, Mr. Crown, for doing all the research. The average days taken upon this move is about 18 days. So call it about 2 to 3 weeks. So you'd expect that 20 to 30% to happen over the next 2 to 3 weeks. What do you know? That might be right when the Fed rate hikes at the end of the month. I think the date is the 28th. Don't quote me on that one, but we'll be following it on our channel. So make sure you hit the subscribe button. I'm just kidding. Only do it if you find the content valuable. And yeah, so that's Bitcoin. The 2-day time frame, we're looking for somewhere between 15 and 20%. I'd say it's fair enough. And then judge the market from there based on what the dollar is doing. Okay. So that's it for Bitcoin and Ethereum. I want to check in on gold and silver because I forgot to do it yesterday. So gold is down $3 today. I don't really care. Gold, I think, is going to rip to the upside this year. I think gold's going to have a good year. And why is that? Well, not only on the 2-day time frame, our Stokes crossed up and we're back in the bullish control zone. So as long as we are, closing 2 days above the 0.5, I'm going to look for this move to get onward and upward and probably head up to about 1950. Actually, let's see where's our first target? Bear with me just a second. And this is the Fibonacci retracement tool. Look at how we're just coming right up to that 2618. An extremely volatile move will head up to 24. And that is the 2618 coming in at 2100, would make new all-time highs. So just be patient. Gold is going to come out there and do us some good here. And it might come down first in the short term if the dollar bounces here, because the dollar is looking like it does want to put in a little bit of a bounce on the 4-hour time frame. But it's struggling. It's struggling to get back up there. So, you can see the dollar come back as high as 104. And is really, as long as we do not start closing the dollar back above here at 104.68, then I would say this move is valid and in play. And, okay, back on to gold. So gold. Back onto this daily trading range. We got about 12 minutes left, 3 minutes left on this video because I've got another meeting I got to jump into here very quickly. But we were trading in this range for a very, very long time. We broke below the range, and now we're back in it. What's most likely to happen once you break back inside of the range? You're going to go back to the top side of the range and maybe hit that 236. 1966 would be my target. If we start closing any kind of a daily above here, and I'm looking for a run at 2200. On gold, silver, very similar price action. We had the extremely long consolidation. Now we're back in, and we're expecting a run back at the top side of the channel, especially with the closure back above 26. And if we do start to break above there, next target's going to be $32 and $39 an ounce for silver. And I do think if gold starts to go, silver will follow. At the moment, it does look like we're going to pull back a little bit more on the daily time frame. Stokes are crossed down. Volatility is extremely low. And if we can't cross back up here in the next 5 hours above $24, then I would suspect, especially if we lose this region at 22, have a little bit of downside first. That's it for silver. So pretty much this is the line in the sand. As long as we hold, $22 on silver, I'm going to expect this move to be onwards and upwards and head back to the top side of the range. Probably a short-term stop there, and then boom. And if we break that region, that's when we're going to call the party in silver. And, okay, that's gold, silver. Let's take a look at Dow Jones because he has been quite strong. The strongest out of all of them. It looks like a value play has been established. People are not going back to tech. Look at Tesla stock. Not yet, at least. And honestly, if the dollar slides down that far, I mean, you could see a bear market rally all the way back up to the highs. I don't think we're going to make new all-time highs this year. And I think, you know, it'd be hard pressed for us to really get out of this channel on the S&P and the NASDAQ. However, if we do break the channel, I'll tell you what, if we take out this region right here on the S&P, next target is here, next target is here. So 4,400, that would be pretty strong. Any kind of a daily closure, really back above 4,200. I'm looking for 44. At this point, though, it does look like volatility is expanding. We're rejecting the bearish control zone. It does look like this wants to break. And, you know, if Dow Jones is the leader of this market right now, then you would expect S&P and NASDAQ to follow. So we covered gold, Bitcoin, Ethereum, NASDAQ, the whole 9 yards. I hope you guys enjoyed the video. Tune in tomorrow for some more fun. And by the way, Jerome Powell, as I told you yesterday, he didn't spank the market. He spanked the World Economic Forum. And Tom Luongo, the guy, has been right on saying that, look, there's been a rift between the Fed and the World Economic Forum. Why? Because guys like Jamie Dimon do not, the bankers in the U.S. do not want to go for this central bank digital currency crap, and they don't want to lose power, right? And they don't want to give it to the World Economic Forum. So what did Powell say yesterday? Powell called on the Fed to resist the temptation to tackle climate change, which isn't even a real thing. He believes he's going to, doing so would undermine the case for their independence, and the Fed's independence from politics is central to its ability to battle inflation. And he also made comments about something about, go stick yourself with a vaccine, right? And all right, that's it for today, guys. Hey, this is the new president, by the way. Joe Biden isn't president. Jerome Powell runs the whole world economy. And he did a good speech yesterday. I'm going to pat him on the back for spanking the World Economic Forum. And I hope you guys will join us. And if you like the content, don't forget, like and subscribe. Take care.